We got more inflation data today that pointed to more inflation. But we also heard Cathie Wood speak yet again, saying that deflation is not the likely outcome. We're going to address both. First, we're going to talk about oil because we got hit pretty hard in oil today. And that is one of our higher conviction bets. And let's explain why we're going to remain convicted in this bet despite the sell-off. It's a pretty aggressive sell-off. We were right on path to break that 6-year high level, $76 per barrel roughly. We were there just a week ago. We were almost there again, couldn't break it, pulled back to 72. A lot of the oil stocks we have over here are ExxonMobil and OIH. When OIH hit its high for the year, about $2.40 a share, it was June 4th. The price of oil was $69 a barrel. Today, after the sell-off, OIH is down to just a little over $200 per share, and the price of oil is down to $72 and about 70 cents per barrel. So given the price per barrel, OIH should be higher. We've noted that trend hasn't been happening recently, and we don't really have a good explanation. The way I see it, though, it's a loaded gun to have happen. Last week, and let me explain another reason why I think this is the case. Last week, we saw significant oil volatility. We saw Tuesday and Wednesday see the price of oil be up in the morning and down later in the day. Thursday, we saw it be down in the morning and up later in the day. Some strange reversals occurring. Today, we saw several reversals that are noteworthy occur. One of which is that in the morning, the price of oil was down, yet the price of the oil stocks was up significantly. OIH was up over 2%. Exxon was up over 1%. The price of oil was down, not too much, less than 1%, but still down. We've been seeing the price of oil go up and the oil stocks stay down. So that's one reversal. And then midway through the day, once Jerome Powell was talking, we saw the NASDAQ go from the leader to the laggard, and the Dow go from the laggard to the leader. Now, I'm not trying to extrapolate that out too much. That happens often. But that typically happens in conjunction with some more rate rise fears. And today we can see a whole lot of moving rates. But they are going to have to test, again, that 200-day moving average. And my bet is, given the hotter than expected inflation data, bond yields won't continue to go down very much. That would not be wise by bond investors. And the market is more thin than it has historically been. The Fed can't monetize the deficit forever. They are doing that because that only perpetuates more inflation down the line. They are kicking the can down the road. My guess is that oil has some sort of local bottom today, and we begin to see interest rates return to rising and the trends reverse back to the fundamentals. What caused the oil sell-off today? Because it did have a catalyst. It's not like oil just sold off for no reason. OPEC and the UAE, Saudi Arabia, come into a deal with more production increases. So we were expecting not to see any more production increases, which is bullish, but left a lot of weak stomachs while they sat there in limbo. Now all of a sudden we've got a deal. There's no reason to have weak stomachs, and we're still below what was consensus a week ago when oil hit that 6-year high. The consensus was we would find a deal or something would happen. We haven't broke $70 this entire time. We've dealt with a lot. Now we're going to have less production than expected at a higher price than when OIH was at 240. And we can expect it to reach that level and rise higher. Now, it's not going to do that overnight. It's an oil stock. This is not Intellia. This is not a tech stock. It's not a growth company. This is oil. So we got to really be patient here. But if we're patient here, I think we can expect these stocks to do pretty well. And they're relatively safe, I would say. Obviously, it's a commodity. But I see a lot of printing of dollars. I don't buy the transitory thing. Cathie Wood, now transition to this because oil will actually do well during inflation. So how valid is this deflation claim? I think it's valid in certain areas of the economy, and it has existed throughout history, this notion of deflation. Yet in the long run, inflation has always occurred, and has occurred particularly strongly when they print money, because no matter how strong these automating forces, this autonomous technology is, the printing of money and the increase to the money supply trumps all of that. There's just more money sloshing around. Yes, we can essentially print goods, but in certain things like oil, there are deals locking that up. Yet the demand for oil isn't very elastic in the short run. Maybe it kind of is over the 20-year time frame, like 30% downside in the demand for oil, maybe. Because EVs don't even take up that much demand. We need to see significant investment in renewables. India is growing, but is far from making that investment. They're also the third largest consumer of energy and growing rapidly in that regard. So, and there's Latin America, of course. Still the United States increasing our consumption, even though our renewable consumption as well. So, as long as there's printing of money and increased household wealth and increased economic activity and no sign of that happening with flights because batteries are heavy, all these things, we can expect the demand for energy to remain. So we're not going to print a whole lot more energy as long as OPEC is in check. Now those who had that weak stomach can feel calm about the fact that OPEC is going to have a deal. So I think things are all right with energy. I think in some areas, deflation might occur. For example, Uber, that is seeing inflation right now. I think that's going to fall. I think the housing market may slow. It's, I don't know, lumber's coming down. They're able to import that. They can take off tariffs, all these kinds of things. But it's really just lumber. I just saw iron, very important material. It hasn't come down at all. It's hitting new highs. Stocks hitting new highs. That's stock market inflation. So we're going to see what happens. This is none of these trends we talked about today are minute to minute. The market feels very minute to minute to me. I'm sticking to the fundamentals, and I believe the fundamentals remain on the side of energy. So I'm sticking with this trade. If it doesn't work, I will have my face ripped off. If it does work, my portfolio will be experiencing the G-forces going up, and my face will be ripped off. So until next time, peace out.